Welcome to video number 4 in our series of various benefits of a holding company structure. We've already talked about 3 potential benefits to a holding company structure for your business. And reason number 4 why a holding company may be beneficial for you is to facilitate multiple business divisions, multiple investment lines, or other pursuits. So in our hypothetical here, let's say, for example, that Kiana and her partners want to add a new product or service offering to their business. And this new product or service offering is unique enough that they think it makes sense to offer it out of a separate LLC from the original operating company. For a couple of reasons, they might want to do this. One, they might want to protect operating company assets from sister company liabilities and vice versa. 2, they might want to maintain flexibility to sell at a later date just the business of operating company or just the business of sister company. And that's going to be far easier to do if they have kept those 2 different business divisions housed in separate LLCs. However, if they decide to do this, and if they own their interests in operating company and sister company directly, that's going to create some legal and accounting complexity and costs. For one, on the legal side, they already have an operating agreement between them for operating company. And if they're going to own sister company directly, they're going to need a separate operating agreement for their ownership that governs the rights and obligations of their ownership of sister company. And both of these documents are going to be complex, comprehensive, thorough documents. And not only do we need to have 2 of them, but we also need to do some work to sync them up, because assuming that they are still viewing their ownership of the business as a whole, meaning both divisions, as unified or consolidated ownership, we need to make sure that the 2 different operating agreements are talking to each other. So it's not just a matter of a new operating agreement for a sister company. It's also a amended operating agreement for the original operating company. So that's going to create some complexity. On the accounting side of things, if each of operating company and sister company has multiple owners, then each of them is going to be taxed as a partnership, meaning that each of them is going to have to prepare and file its own tax return. So there's additional accounting cost to that. You're also going to have some restrictions in being able to transfer cash from operating company to fund operations of sister company or vice versa. Anytime you do so, you're going to have to at least treat it as if you are distributing cash from one entity and then to the owners and having the owners recontribute it to the other entity. So there's some legal and accounting complexities and costs to not having the holding company. Whereas if we have a holding company, now the partnership terms between Kiana and her partners can still remain in the operating agreement of holding company. We can just have one complex, thorough operating agreement up here. And we will have just very simple, short form, single member operating agreements for each of operating company and sister company, because each of them is wholly owned by holding company. We don't need to have complex agreements at those levels. So the additional legal cost is relatively minimal. And on the accounting side, where operating company and sister company are each wholly owned by holding company, they can be disregarded for income tax purposes, meaning that neither of them needs to file and prepare their own tax returns. They can just report their income and losses on the consolidated tax return of holding company. So we are not adding much accounting complexity or costs with this holding company structure. So there you have it. Reason number 4 why the holding company structure may be beneficial to you is that if you do decide to pursue multiple ventures, business divisions, investments, you can do so in a way that provides you some liability protection, some flexibility on eventual disposition of just one, but not all of those various lines, without adding a great deal of legal or accounting complexity or costs.